A lot has happened in the digital asset space since we last spoke about 1 year ago. Most recently, spot Bitcoin ETF started trading here in the US after the SEC approved 11 applications from asset managers including BlackRock, WisdomTree, and Fidelity. So I'm wondering, what was your immediate reaction to that landmark decision? Did you see it coming, and what does it signal to you?
We certainly anticipated it, but obviously until it's finally approved, we never kind of expected, but it certainly was our expectation that it was going to happen. In terms of the actual kind of broader implication for the market, we're incredibly positive. And I think it's kind of a big seminal moment. There's been obviously a huge amount of focus, in the build up to this. And so actually seeing, big regulated institutions having that ability to issue Bitcoin ETFs is a very kind of powerful, I think, statement for the market. And I think while we might not see something kind of instant in terms of like some huge impact, I do think over the course of the year we'll actually see the full impact of this as more investors actually come in to invest. What you're seeing at the moment is predominantly retail investors. As people now on the wealth management side, the institutions start to go through their governance process to be actively investing, I think we'll start to see a significant amount of investment from those particular parts of the industry. So yeah, we're very positive about the impact for this year. And I think as you think about 2022, where the sentiment was kind of filled with probably a lot of negativity for the most part, actually kind of having something that is really positive, I think is very good. And I think that extends more broadly across the digital asset ecosystem.
Now, Goldman Sachs actually came out with a report earlier this month outlining some of the benefits and drawbacks of these spot Bitcoin ETFs, and at the time, the potential approval of them. One of the benefits outlined in the report focused on institutional investors. Those benefits could include low management fees and investor protections afforded by these ETFs. What are some of the benefits that jump out at you?
Yeah, I think there too, as you kind of highlight, I think if you're investing pre the Bitcoin ETF, the actual cost was probably a little bit higher, and you saw the pressure amongst the asset managers in terms of even just pre-launch the pricing, and so people were driving down pricing, and the competition is very healthy. So yes, I think it's a more cost-efficient way to invest. I think the investor protections, particularly for wealth management and retail, are significant, and so that is something people really are quite focused on. But I think in the context of the institutions, that ability to invest in a product that is institutional grade, obviously can trade on many different exchanges, I think is hugely powerful. And when you look at kind of the marketplace more broadly, we've got the Bitcoin halving, potential rate cuts, not clear when exactly, and then also you've got Ethereum upgrades. There's just a lot of positive news this year. So I do think, from an institutional perspective, the direction of travel is very positive.
And what about some of the drawbacks tied to these spot Bitcoin ETFs? According to that Goldman Sachs report I referenced earlier, they mention the fact that crypto can be traded 24/7, but these investment vehicles are limited to market hours. What other drawbacks jump out at you?
I think that's, a very obvious one as well. And I think also, as we start to think about Bitcoin, if we do see, huge amounts of investment into these ETFs, there's obviously a scarcity of the underlying asset as well. So that's something we don't need to worry about today, but something to consider on the forward. And I think, for me, I think the positive aspect is the breadth of the market that it can focus on. So yes, the point around the market hours is one, obviously from a trader's perspective, they need to be very cognizant of. But yeah, I think that would probably be the key ones.
Now, what does this approval mean for Goldman Sachs? I know that Goldman runs a team trading crypto derivatives for institutional clients, and I read that you mentioned that you have seen significant growth in client interest for crypto derivatives. So what else is changing as a result of these approvals?
I think it's a really good question. And I think for us, this ability to actually be kind of more actively involved in the US, with these products is actually kind of from a crypto perspective is very powerful. So we're, active on 7 of Bitcoin ETFs that have been approved as authorized participant, soon to be 8. Plus, we were already active across, kind of the US in the context of the futures ETF, but also, more broadly across the globe, we're active in market making with the ETPs and other type products. So I think for Goldman Sachs it's great because we can be more active. And as I look at kind of the broader markets business, it's the business that focus on ETFs, the ones looking to not only facilitate client demand, but also on both an agency but at a principal basis as well. So I think it creates kind of opportunity in that space for a cross-section of our clients. And I think as we start to think, like I say, kind of the broader product suite, you start to think about other products that can kind of, follow on from that, like structured note products and other kind of, things like that.
I came across a CoinDesk article from January 3rd, which said that Goldman Sachs is in talks with Grayscale and BlackRock to play a key role of authorized participant for their ETFs. Where does that stand now, and are there any updates?
Yeah, well, we're actually authorized participant now on 7 of the Bitcoin ETFs that launched, one of which was the BlackRock and Grayscale as well. So we are very pleased to be able to to play that role with those kind of issuers. Also, when you look more broadly, Fidelity and others, we're also active with it as well. It was important for us. Our clients are very keen to be kind of active in these products, and so being able to act as authorized participant, which for those not familiar, that just enables you to be involved with the creation and the redemption of the Bitcoin fund units, ETF issuance certificates rather, which I think is kind of also an interesting point to mention. So had these products been kind of created and redeemed in kind, which means you'd have had to have kind of been involved with the underlying asset, that would have been more difficult for us as an institution to be involved. But the fact that they were cash create and redemption has meant that we have been involved, and so being able to work with like the BlackRocks and others has been very important for us. So we're delighted to be.
You mentioned potentially soon to be 8. Are you at liberty to disclose what that 8th one might be?
No, I mean, it's just something we're going through our internal approvals with, that's all. But it's kind of, I mean, it would be kind of the obvious ones as part of that 8.
Interesting, and it will be very interesting to see what happens in that regard. But what do you think has changed since these spot ETFs started trading, specifically as it pertains to the perception of crypto?
I mean, it's an interesting question. I mean, obviously, when they were issued, there was, a focus in and around, if you're an evangelist, you're kind of creating and using, the very kind of institutions that perhaps the whole creation of cryptocurrency was designed to navigate around. Personally, I think it's exceedingly positive because, as we've seen, over the last 12, 18 months, the regulated institutions that are well capitalized, do have a very important role to play if you really do want to build out the crypto marketplace. And so allowing, the institutions, be it on the buy side and then the sell side, be it, as I said, to act as authorized participant to market make, is actually a big positive, I think, for the market more broadly. And then going back to one of the earlier points you made around the investor protections, that is obviously a big positive for, kind of a cross-section of the market that perhaps weren't or a little hesitant to get back in, now recognise that this is an institutional grade product and they can comfortably get back involved into the marketplace. But I must emphasise from our perspective, we're obviously more focused on the institutions and the wealth management businesses.
Now that these spot Bitcoin ETFs are trading, what do you think will happen with those applications for spot Ether ETFs? I
mean, a big question, obviously, kind of naturally centres around whether it's perceived to be, a security or not. And I think that will ultimately be determinant on whether it gets approved. I mean, there are different schools of thought, but, I think I personally remain positive that they will, but we'll find out, I guess, over the course of the next few months.
Absolutely, and the SEC is due to make its first decision in May, so it's fast approaching.
Yes, it is. It really is, yeah.
But what do you think is next for crypto now that these spot ETFs are live? I know last time we spoke, you noted that you were optimistic about the acceleration of adoption. Do you think that's going to be amplified now that these spot ETFs are trading?
Yeah, I think kind of there's 2 bits I'd dissect that into. So the kind of broader adoption was probably a little bit more around digital assets writ large. And so there, I think in tokenization, thinking about the use of the underlying technology for transforming the way capital markets operate. I think for crypto, I think it kind of goes back to one of the points I was talking about earlier. I think we'll start to see, a steady flow of investment into this space. I think, the BlackRocks and these funds have actually started to perform very well. You've started to see the asset under management grow. So I think we'll continue to see that. And as more people are approved to invest, I think that will be positive. You just need to look, when we spoke last time, Bitcoin was down 60%, I think, kind of year on year. If we actually look over the last 12 months, it's just shy of 100% up. So there's obviously been a lot of positive momentum, in terms of the asset class. There's been a little dip since obviously the Bitcoin ETFs have been issued, which I think is perhaps understandable, just given, a lot of the focus and hype around it. But as we start to see like the Bitcoin halving, as I mentioned, the rate cuts and things, and we start to see people, really kind of allocate a certain portions of their portfolios into this space, I think that, is going to be a positive. And if you think about, is this market being institutionalized, just look at the amount that's open on the CME. The CME now has more open interest than any of the unregulated exchanges, which, is a big shift in terms of the dynamic, which really highlights the institutions, are looking and focused on this market. And some of the activity we see within the portfolio companies that we've invested specifically points to, some positive momentum there as well. So that's good. But then when I start to think about the broader kind of digital asset marketplace, this is actually, there's a big shift in sentiment, and I think you can visibly feel it, and I think that's good because we've seen a big kind of shift in terms of the breadth of the marketplace, the asset managers, as I talked about last time, sell side, even the FMIs really kind of start to focus. And this year I expect to see in that space, and in part the likes of the BlackRocks have played a big part in really kind of moving the market forward. But as we start to think about the digital asset marketplace, where you may be tokenizing certain types of funds, issuing digital securities, using it for collateral mobility, now it's all about, forget kind of proof of concept, it's about really showing how you can create markets with liquidity and actually start to commercialize this. And for us, as we think about some of the key kind of trends for this year, one is, crypto, and I think we've talked about that quite a bit. And I think, we're starting to see a lot more appetite, across the market there. But I think in terms of digital assets, we're really starting to see, kind of, I think, evolution in terms of the offerings in a very positive way, which I think really helps the broader use case of the underlying technology.
I recently read a Reuters article where you were quoted as saying there's a huge appetite for blockchain-based assets, which grew significantly in recent months. Why do you think that is?
I think it comes down to people recognize that the technology that we've talked about, quite a lot over the last few years is fit for purpose. I always use the example of using blockchain technology for collateral mobility. Often people have talked about over the last few years, blockchain is kind of this technology, looking for a problem to solve. But if I look at the way collateral moves across the market, actually there is very clearly a problem there, in terms of the fails, the inefficiencies, operational settlement. And so the blockchain technology can actually have a very profound positive impact on the way those marketplaces operate globally. And if you think we're in a world now where capital and liquidity becomes more expensive, this ability just to be more efficient, kind of in the use of the financial instruments on the blockchain technology, that's very powerful. And again, it's not something kind of new in the sense that we've been talking about this for a while, but I think what's new is the kind of much broader kind of set of institutions now looking to be more actively involved. And I think people can see how to commercialize, and I think that's the key point. So about the adoption, liquidity, as I went back to one of my earlier points, that's kind of key and a big focus of everyone, but you can really start to see now how people can show the commercial value proposition in a way that organizations can say, okay, fine, we are going to continue to move forward with our strategies and building out the teams.
Last time we spoke back in February, you noted some of the key areas you were focused on in the digital asset space, including tokenization, which you just brought up once again. And you also mentioned that you were looking to re-architect the financial plumbing so that blockchain technology can have a profound impact on the movement of collateral across the marketplace, which you brought up again as well.
Yeah.
But are those still focuses of yours
Huge.
right now? And would you like to elaborate on some of the other predictions, perhaps the expansion to new assets?
Yeah, I think, look, you touch on a lot of good points there. So I think in terms of tokenization, when I talk about the creation of marketplaces with the broader cross-section of stakeholders, there's no lack of appetite, from the many different forums I'm involved in globally, in terms of the cross-section of stakeholders in the market, be that sell side, buy side, and as I said, the kind of FMIs. And so it's kind of fine-tuning what is it exactly they need. So in the context of tokenization, there's no lack of interest, but it's creating the secondary liquidity, creating those marketplaces. So that's a big focus of ours, but many others across the market. And there's a positive momentum there that we think we'll really start to see that kind of play through this year. It'll start small, but once you can start to prove that out, you then bring in the broader cross-section of investors, which is many of the buy side who have built out their digital asset strategies and teams. Re-architecting the kind of the financial plumbing always sounds very grandiose, but it goes back to the point, as you mentioned, thinking about collateral mobility, that ability to transform the way intraday liquidity moves across the market, repo, securities, finance, allocation of collateral to derivatives. These are massive markets. And if you can kind of transform the operational and settlement efficiencies there, de-risk the way the market operates, that's powerful. And people can see that. There's a microcosm of certain parts of that we're already doing, and we can see and taste the value. As you broaden that out, you can really show, as the market kind of really scales up, how commercially that can be hugely impactful.
Now, according to Goldman Sachs trading desk, 2023 was the year that crypto markets became institutionalized, most evident in the derivatives market. Why do you think that is?
Yeah, I think in the context of going back to the CME, if you think about the trading desk we have at the Goldman Sachs in the crypto space, it's cash-settled derivatives, options, futures. We're very active in the ETP, ETF market making, now active, as we talked about, as authorized participant for these Bitcoin ETFs. But I think what we did see in 2023 as a byproduct of what happened with FTX and many others was those actually interested in this space wanting to trade with institutional, highly regulated entities. And so we had a lot of incoming from our client base looking to onboard with us, and that hasn't stopped. Similarly, going back to kind of the CME with the open interest and the activity there, that also is a very strong reflection of that institutional kind of interest and activity in this space. So, I think we'll start to see, hopefully, as the market does continue to mature and we see more volumes come in, more continued activity in that space.
Looking back at 2023, what do you think was the biggest accomplishment in digital assets for Goldman Sachs? What are you most proud of that your team was able to accomplish this past year?
I think actually everything we talked about last time, kind of if I think about, kind of what have we done over the course of the year, thinking about kind of broadening and trying to scale out tokenization, that's something that we've seen a huge amount of positive movement. So, you'll start to see a lot of the foundational work that we've done in that space really play through this year. I think on collateral mobility, when you talk across the market, and this is, working collaboratively with many, of our peers, you really start to see people do really recognize that as a marketplace that is transformative. So I think seeing all of that progress in a really positive way, I think as you start to look at the buy side, there are many others who can take kind of credit for this, but actually seeing the cross-section of that part of the market become more actively involved and really trying to work closely with them, again, I think is very powerful for the forward as you start to see, kind of how we see this marketplace develop and evolve. And then I think from a regulatory perspective, less, influence from us, but just, seeing how we've got more clarity, which, gives people confidence for investment, building out their teams. I think that, again, is another very positive aspect of what we saw. But I think, I've got a really strong, great, and powerful team that I'm very proud of. And I think we've achieved a lot across many different parts of the business, be that tokenization, the development and growth of our digital asset platform, the work we did on collateral mobility. We've got a lot of companies that we've invested in. There's work that's associated with that. So, we're very happy with the portfolio of companies that, relate to kind of blockchain infra. And digital money, again, we've not really touched on, but again, just seeing how that's evolved over the last 12 months as well. Digital money is key to having both the asset and liability on chain. And so as we think through kind of how we want to position ourselves, in that space, I feel very happy about how that's evolved too. So Yes. I think there's a number of different accomplishments, but I think we're moving in the right direction and feel very positive about this year.
Now, you mentioned regulatory advancements. We have seen many this past year, including from the UK, where you're based.
Yeah.
And this year in 2024, the European Union's comprehensive framework for crypto regulation is due to take effect, known as MiCA.
Yeah.
We have seen regulatory developments in areas like Singapore, the United Arab Emirates. So how does that all factor into your business? How are you able to operate as regulation continues to evolve?
I mean, it's a really good question, and I take it all as very positive, because I think actually having regulations gives you clarity, and then you can then have a framework within which you can determine, what it is that you can do. And so, just taking kind of the markets in crypto assets, I mean, the European Union have done a very good job of really kind of being, I think, at the forefront of this marketplace. You may not like every aspect of their regulation or the framework that they're looking to implement, but what's hugely positive is you get the clarity. You know that it will kind of evolve, and that gives you, a framework within which to work and move forward, which is hugely positive. And I think what we've seen across the globe, people are moving at different speeds, but I take it all as a real strong indication and validation of this space, which is good.
What would you like to see from lawmakers here in the U.S. as it pertains to crypto regulation?
I think we've started to see kind of, an evolution in the way that they're thinking about regulations. And the Bitcoin ETF just a good example, of a positive development. So I remain really optimistic. I think the knowledge, within, the regulators is phenomenal, actually. They've really kind of spent and invested a lot of time in this space. So as like with us, as you kind of understand the space, you get more comfortable. So, I think, the future looks quite positive. May take a bit more time, but yeah.
Last time you were on the show, you discussed Goldman Sachs' digital assets platform, GSDAP, which launched in November 2022. So now that it has been more than a year since its launch, how's it going?
Well, I mean, if you take the 3 awards that we won, really well. We're very excited about how, it's evolved. We're live in Asia, and actually we have the kind of the Hong Kong Monetary Authority debt issuance that we executed last year. That's going to mature in February of this year. So you'll have seen the full life cycle from issuance, secondary trading to maturity. And I think, again, that's a powerful kind of endorsement of what's been developed on the platform. To show that you can actually kind of digitize the whole life cycle, and you start to, as a byproduct of that, see the efficiencies that can be gained. And so that's hugely positive. We matured the debt instrument in Europe as well. We're going live in the US in the next month or 2 as well. So we will have a platform that will be, active across the key geographies. So we're very happy. We're working very closely with a number of stakeholders as we start to kind of move forward on a number of other projects. And it comes back into kind of one of the points, I was talking about earlier. Scale's key, creating that marketplace, but liquidity is at the heart of everything. And that for us is, a big focus, both the US, Europe in particular.
Now, last time we spoke back in February, Goldman Sachs had 11 crypto companies in its portfolio, including TRM Labs, Coinmetrics, and Blockdaemon. So I'm wondering, where does that number stand now?
We may have divested, so it may have been 10 actually, because we divested one of the companies last year, but we actually invested in a company called Finality, which is a company that focuses on wholesale central bank digital currencies. So, we've maintained the critical mass in terms of portfolio. I think for us, one of the strategic, kind of rationales, if you will, for investing in these companies was to accelerate our own strategic direction of travel. And so really kind of as we started out on the journey, as we built out the business, there was probably a more pressing need to kind of find the right partners to work with and invest in companies. And so in terms of the portfolio we have now, we're super happy, as a business, we're really kind of very actively involved in all the key companies. So, unless, it's exceptional, there's no kind of accelerated need to continue that pace. We obviously remain kind of vigilant, see if there is any that make sense. But I think first and foremost, it's really working with the companies that we've invested in to date.
Are you still coming across more sensible valuations?
I think the valuations, yeah, absolutely. I mean, I think, again, you see this kind of where some of the secondaries trade. I think obviously cheap money allowed a lot of these companies' valuations to be significantly inflated. As we talked about last year, they were coming down, and I think that was probably a trend through last year. It'd be interesting to see as rates, do start to kind of come down during the course of this year, kind of what impact that could have potentially on, kind of prices. I suspect we're definitely not going to see anything, in the order of magnitude that we saw 2 years ago. I think as I look at people who are deploying capital, and it is a bit more kind of scarce in a way, they're looking at the quality of the management team, the business model. So there is much kind of rigorous, much more, I wouldn't say much more rigorous, but a more rigorous focus on those key aspects for people before they deploy.
What can people expect from Goldman Sachs in the digital assets arena in 2024?
Well, I'm super excited. So there's a lot of different projects which I can't go into graphic detail on that we're working on, but I think, for us, I think it's going back to kind of looking at the core trends, starting to kind of scale out some of these tokenization projects we're working on, starting to see kind of, I guess a broader cross-section of the market more actively involved, which others that are involved in this space are obviously very focused on as well. I'm really kind of pushing forward on, the kind of the use of the underlying technology for collateral mobility. I'd say be the key ones, and then, as I said, being active in the crypto space as well. I think it feels like we've turned a corner there, and I think, it'd be just really fascinating to see how that evolves this year on the institutional side.
Absolutely, and it certainly will be very interesting to continue to follow all that Goldman Sachs is doing in the digital asset space. Matthew McDermott, Global Head of Digital Assets for Goldman Sachs, thank you very much for joining us.
Thank you very much for having me on.
Right here in New York City in person.
Thank you. Appreciate it.